a famous investor the other day at a conference we were speaking at both in Boca Raton, named Leon Cooperman. And he said, every day in Africa, a gazelle wakes up and realizes it has to outrun the lion to survive. And every day in Africa, the lion wakes up and realizes it has to run faster than the slowest gazelle to eat or it'll starve. So the lesson of life is keep running. And the lesson of Silicon Valley is keep up with the change. My lesson from venture capital is it's about the network, it's about the people. If you treat people right, as you know from the karmic principle, it will generally come around to benefit you. If you screw people up, they're going to remember. If they screw you up, hopefully you will be smarter the next time and not want to work with them again. And I'll give you one more lesson. We have been so blessed to work with serial entrepreneurs. We've backed them one time and they were successful, twice and they were another successful, and sometimes we're on our third round with these entrepreneurs.
Hello, everyone. Welcome to another episode of Startup Project Podcast. My guest today is David Blumberg. David is a long-term investor with multi-decade experience in investing in early-stage tech companies. He had invested in tech companies starting from the 90s. So one of the most experienced investors to be on the show. He's also one of the early investors to be investing in Israeli ecosystem. Today we'll talk about some of his successes, some lessons, and what he's focusing on right now, and what he learned investing over these last 3 decades, and a lot more. David, welcome to the show.
Thank you, Nataraj. I'm so glad to be with you.
So where are you joining us from today?
In our offices in Miami area. The town is called Sunny Isles Beach, and we're right across from the beautiful azure blue Atlantic Ocean.
Amazing. So I think a good place to start is, you have this amazing breadth of career, starting from working at Rowe Price to starting your own fund. The question I want to start with is, how did you get into investing in tech companies, that do early stage tech companies? At what point did you decide that, hey, I should start investing in a tech company?
All right, I'm going to go all the way back to my high school days, because I'm that generation that came to age after the Watergate scandals of the 1970s. And that was an era when a lot of us people were depressed about the future of America, about the future of government, about the future of being able to solve big problems. I was idealistic. I wanted to solve problems. So I said, I think I should go into the government. So I was lucky enough to get to go to Harvard College. I started to study international relations in the government department and economics. And I loved the courses. I was really learning a lot, soaking it up like a sponge. And I worked in Washington for 3 summers. After those 3 summers, I realized that Washington was the place that causes a lot of the problems, doesn't solve them. They try, but they have this problem called unintended consequences, which often life happens in a non-linear fashion, and a lot of their projections are made in linear models. In any case, at the same time, I had 3 big influences that moved me toward business. One, I was a middle-class kid, and so I needed to work. And I started a business at Harvard called Harvard Distribution Services. That company still is going today. It's part of Harvard Student Agencies. I employed 100 kids. We were doing distribution and courier service. And it wasn't a tech business by any means, but it was so much fun to serve customers, hire my friends, get paid for it, get feedback, and build new ideas for what we could offer them in the future. So that was number one. Then I had this negative experience in Washington where it was very sexy. You were close to power. You were at the foot of the senator or whatever, learning about all these policies. But there was just this level of bureaucratic slowness, lethargy. Nobody cared. The taxpayer was always on the hook, and there was no accountability. So I didn't like that. And then there was the other interesting thing. I did a thesis, and I'll make it very short. It was on African-Israeli relations between 1973 and 81. Relatively obscure topic. What happened? Well, in 73, there was an oil embargo after the Yom Kippur War. The Arab countries mostly forced the African countries to break diplomatic ties. But in those same years, 73 to 81, it went up 800%. Between those same countries that had just broken off diplomatic ties. So I thought, this is unusual. And so what I found out by doing a lot of research is that it was the business people and the military people and the ministers and priests that would bring their flocks to the Holy Land that kept going, despite the political rhetoric the other way. They had real interests. The real interests were economic, they were military, they were religious, and those persevered and outshone and persevered the political noise at the UN. So I thought, well, that's interesting. Here's my conclusion. I decided that I want to help impact the world while I'm alive. I had great family, great parents. I've benefited from the history of all progress of Western civilization. I want to increase goodness for the world and help everybody thrive. My watchword is human flourishing. I'm all about human flourishing. Now, to me, the most high impact way to get human flourishing is the combination of capitalism and science. And the vehicles, the profits of that drive forward are entrepreneurs. So I am all about entrepreneurs. I love entrepreneurs. I am an entrepreneur, but mainly I back them now as a venture capitalist. So that's my role in the world. And I feel blessed and grateful that I get to do this every day.
So talk to me about when did you first start investing in a tech company? And if you can remember the first tech company that you invested in?
Well, yes, it was as a public investor because after Harvard, I went to T. Rowe Price, as you mentioned. At T. Rowe Price, I was on the technology team as an assistant securities analyst. And my job there was to meet companies often that were about to go public. So they were private and they were about to do an IPO. And I would form an opinion on their financial progress, their future, their marketing relative to their peers. And we would come up with a thesis about which of the IPOs in a new industry we would want to invest in. So I started investing that way by making recommendations to the portfolio managers. One of the ones that I remember investing in was a company called Scitex, SCITEX. And you mentioned that I also invested in Israeli companies for a long time. That was interesting because T. Rowe Price had never invested in a public Israeli company at that point. And their theory at T. Rowe at that time was, well, Israel's a very socialist country. It has a very high inflation rate, and there are these periodic wars and terrorism. So it's probably a dangerous place. We shouldn't invest there. My counter argument was that's already priced into the stocks. Their pub price to earnings ratio, if it's public stock, was lower than a comparable company selling for the same relevant revenue and profitability in the US or London. So they bought my argument. And we started to look at Israeli companies and start to buy them. So Scitex was one of the first that I helped get into the T. Rowe Price portfolio.
So you mentioned, so this is an Israeli company that was going public or already public. And you mentioned that Israel was considered as a socialist country at that point.
At the time, in the 1970s and 80s, yes.
Yeah, I think I remember, even India was mostly, because I came from India, and it was mostly considered sort of socialist until 1990 when the economy sort of opened up. That makes sense.
If I can pick up on your thread,
yeah.
India and Israel share a lot in common. They both had the experience of British colonialism sitting on top of them. And the British did some good things and the British did some bad things. One of the bad things that they did at the end of their colonial rule was that there was a very powerful group of economists from the London School of Economics and probably Cambridge and Oxford that believed in what's called import substitution as an economic model. And Israel was told to do that, and India was told to do that. It was completely the wrong idea. It really messed a lot of things up. So, for example, when I first went to Israel, they had a very strong tariff on computers, personal computers. And I said to some of the government folks, if you're trying to build a software industry, it doesn't make sense to have high tariffs on the tools you need to write software. And so over a period of time, not because of me, but they started to reduce tariffs to regularize the taxation of venture capital funds. But the early stages in the early 80s, there really wasn't any venture capital in Israel. There was onerous taxation. There were not the kind of stock option permissibilities that we take for granted in the US. Now, Silicon Valley was novel. And I think some lawyers tell me that I was the first person that brought a standard Silicon Valley term sheet from Wilson Sonsini over to use on a deal in Israel in the early 80s.
There's this amazing book called Startup Nation.
Of course.
It's about Israel. Yeah, and I was about to bring that up. Silicon Valley obviously is considered the gold standard for tech innovation, and probably Israel comes probably in the second or third. I would say probably second internationally. I think
certainly in density per capita, it might even be higher.
Yeah.
In terms of entrepreneurs per capita in that country, but Silicon Valley is the center, no doubt.
Yeah, and there's an interesting comparison of countries which got independence at the same time as Israel. For example, I think it's South Korea, Israel, and Hong Kong. They all not Hong Kong, there's some other country, but they all sort of got independence at the same time. And even India got the independence at the same time. But it's not only Israel was able to go out, sort of develop a tech sector that is innovative as in comparison to Silicon Valley. And one of the sort of projects that helped them to do that was Yozma, where government seeded or allocated certain funds and made it so lucrative for venture funds to come into Israel and invest in companies in there. Were you exposed or part of Yozma at
Yes,
that
I
time?
was very involved. I even helped contribute to some of their ideas. I should take a very small role, but most of the credit goes to other people. But here's what I want to push back on. The notion that government leads on these things. I don't really believe that. Here's what happened. I was invited by the group I'm sure know called TIE, the Indus Entrepreneurs, right? So they invited me to come to India on a delegation in 1999 to go to talk to the leaders of India, the government. We went with Mohan Singh, I think we just passed away. We met with him. We met with the telecoms minister, the finance minister, the military folks, all kinds of leaders of the economy, the Ambani family, et cetera, et cetera. And the message, I said to them, well, I'm very honored you want me to come on the delegation with all of you Indian American billionaires and entrepreneurs. Why me? Why David Blumberg? And they said, we want you to tell the story of Israel, because Israel had the same British colonial history. They were also a people full of mathematicians and scientists like India. And yet both of those countries lagged until they had a takeoff. And then what they said to me is these Indian folks, you probably know them, Sabir Bhatia, Suhas Patil, Kanwal Rekhi, among others. They said, we were village boys in India. Nothing. And we came to a good university, and then we went to America, and we became super successful entrepreneurs. It's because of the American system of the government getting out of the way. Whereas in India and Israel and most of Africa and a lot of developing countries, there's so much bureaucracy, so many red tape, and it allows the bureaucrats, frankly, to get rich through corruption. But it really impairs and it depresses the entrepreneurial energy. The most important thing for governments to do is just get out of the way. Let the entrepreneurs do their thing. We have too much permitting, too much regulation, too much red tape, too much impact studies. It's very hard to do things now in the United States and in most Western democracies. We get sclerotic. And so what India needed to do is get out of the way of its own people, get off the back of its own entrepreneurs. Israel had to do the same thing. And I must tell you, Israel had, since 1948, the most advanced technological workforce in the world. In other words, the most people with postgraduate, per capita in the world. But they were not that successful in tech until the government got out of the way. They had economic reforms. They allowed stock options and equity structures and reformed their previous socialist mindset. I'll remind you that in 88, right in the late 80s, the Israeli economy crashed entirely. The banks failed. The government nationalized all the major banks. It was a complete disaster. They had just had a period of terrible inflation. And it was only with the help of Chicago-style economists and MIT economists who basically said that you have to allow the free market to work its magic. Same thing is what we told India in the 90s. And you've seen the power and growth that India's enjoyed too. So it's not that government leads so much. It's just get out of the way.
I think, I agree with you in that sense that the government didn't really got in the way in terms of the way I understood Yozma was they sort of aligned the incentives and got out of the way.
Okay.
I think they gave the incentives for sort of a trigger point.
Let's go specifically to Yozma. And there was another program, interestingly, because most governments are driven by political goals. In Yozma, there were certain constituents that wanted private sector institutional funding. That became the Yozma program. There was another fund, I can't recall what it was called, but it was to get the retail investor interested. So Yozma did a program where if I raise a fund of $100 million, Yozma would put in, I forget, but something like another 100 million. And at the end of the fund's life, if the fund was a success, we, the investors, could buy out the government
at a nominal value.
Great double profit. The other program, which did not work very well, was, I forget the name of it, but it was oriented toward retail investors. And those people are not so much interested in more gain to accommodate for the risk that they perceive, but they want less loss. So they wanted insurance. So this was an insurance policy attached to publicly traded venture capital funds. That did not work. And again, it's government trying to be too smart and trying to do too much. The main thing government had to do was get out of the way. I will applaud Yozma because they insisted on one thing that was good to promote, which was cross-collaboration between international experienced venture capitalists from the US and Europe and maybe Asia and Israeli local investors who were doing this for the first time. That was positive because there was a flow of information. There was a transfer of knowledge, a sort of osmosis of the brain. And I do credit that as a positive thing.
Yeah. Other interesting fact about Israel ecosystem is Warren Buffett's first investment outside the US, he's an Israel company.
Yes.
Intel's first office outside the US was Israel.
Iskar.
Yeah. I mean, Israel sort of came a long way from 1990, and even now, like for security companies, Israel is the place, and I always keep tabs on, what Israel companies are building, and the founders they come up with are usually very exceptional, and one of the highest quality of founders that I've ever seen in any other ecosystems.
And again, that did not exist before. Israel did not have MBA programs. Israel did not have really a culture of appreciating entrepreneurs. In the old days, under the socialist regimes of the 50s, 60s, and early 70s, and even 80s, the smart kids went into the government or the military. That you're serving your national duty, and that was the highest value. Then there were a few people who did become entrepreneurs, became successful, and they became paragons and role models for the next generation. And then I will credit this. I think the Talpiot and the 8200 programs, these are special units in the military that recruit for the brightest people. They give them great training. They put them in a small group. They give them a budget and a deadline, and they say, here's your project. You must design this new kind of technology. And they're bonded through fire, essentially, under fire. The way I say it is they put, John and Jill and Jack together, and electronics, physics, radar, build this, and your grandmother's life depends on it. And so these people are forged together. They're tempered like fine steel. And when they come out of the military, they have been bonded and tested. So think about it, when you're finding a fellow to co-found your company with, if you've been through that experience of the military together and you've had each other's back, literally, it's a very powerful way of determining if this person is going to be a good co-founder.
There was also a comparative study with, as I said, those three countries which got independence at the same time and why they were not able to, or the third country was Singapore. And one of the reasons why they're not able to replicate what Israel did is the hierarchy structure in military that forges these bonds. Singapore has a very bureaucratic system, same with South Korea, and Israel has a pretty flat structure.
Yes.
You are always counter-arguing with your leadership.
Right.
You're allowed to question. Well, Singapore is completely opposite of
more hierarchical, respect.
You just follow the rules kind of system. So if you are not questioning the rules, you can never innovate. And that's sort of like the conclusion between these three ecosystems, is that you can never sort of be such a rule-following place and at the same time be innovator.
Well, I'll quote one of my favorite authors, the psychologist and political public intellectual Jordan Peterson. He talks about the fact that hierarchies need to be based on competence and meritocracies, otherwise they will ultimately not be efficient and they will crumble. So the Israeli military structure is very practical. It's very positively inclined to reward excellence and to reward bravery and to reward initiative. A lot of militaries are not structured that way. And so I think that's benefited the Israeli economy, if you will, or the society a great deal. One of the best things that they do is called a 360-degree review, where after a mission, everybody gives a critique, and it's no holds barred. A private can tell a general, you could have done this better. And it's very clear and very focused. There's no blame. It's just, here's what happened. Here's how we make it better next time.
Yeah. So, moving on.
Yes.
Before starting your own firm, you also worked at Claridge, which is also one of the famous family offices. Talk to me a little bit about that experience, how that shaped, your investing later on.
Sure. I'm going to go backwards a little bit because my first mentor was Fred Adler. And I met Fred Adler when I was at Rowe Price. And he was the only big American investor who was very successful in America. He was also willing to invest in Israel. And I was interested in that combination. I wanted to be American and Israeli and invest in high tech. And he was the only name in town. So first, I want to give him great credit because although he was a very difficult man, he was brilliant and he exposed me to venture capital at my beginning of my career. Then I was fortunate to also work with Alan Patrikoff, another great venture capitalist who's still investing in his 90s. He was great. I worked for him in Paris. And then I worked for Charles Bronfman at the Claridge, which is the family office of the Bronfmans in Montreal. And again, I was investing in the US, Canada, and Israel. It was a family office. So family offices have different criteria than a traditional venture capital fund. They had certain personal issues that they wanted to steer clear from. They wanted to emphasize other areas. There were certain cash flow goals and so on, and their background was real estate. So that was a little bit incompatible with my background in venture capital. So I had to push and pull and try and explain and convince why we should structure deals in a certain way. For example, they were used to structuring deals with debt. And I pretty clearly explained to them that debt in a venture capital structure in the early stages is not really worth the paper it's written on. And we needed to be equity owners and get rewarded for that equity risk.
So then you went on to start your own.
That's right. What the best deal I did at the Bronfmans, I'm kind of proud of it, was a little company in Israel was wanting to sell. I looked at it at Bronfmans as an acquisition. I wanted to buy it outright. It was a pharmaceutical company. The Bronfmans were not willing to do it on our own. They wanted us to merge it into another blue chip in Israel. And so we bought a company called Abic, A-B-I-C, and back-to-back flipped it right away into Teva Pharmaceuticals and in return for a large stake. Teva at the time was only worth about $1 billion. And it's later rose to, I think, between 40 and 60 billion over the years. It's since fallen a bit. But in those early years, it was a rocket ship, export heavy, selling to 50 plus countries. I think it's now the largest generics manufacturer in the world. And it was a real testament to that Israeli innovation mindset of taking something and improving it and reducing its costs and then being able to export it at world-class scale. And in so doing, they made a world-leading company. Then moving on to Bloomberg Capital. I started that in the early 90s. And at first I didn't have a fund. So our team was very small. And what we did is we called it a virtual venture catalyst. And what we would do is work with investors, mostly family offices, to find deals for them. So in compensation, we received a salary, sort of a retainer. We received cash on the completion of a deal and then equity as a kicker to make sure we were investing in the best quality deals. We had 9 investments and it was a next return on that portfolio of 9 companies, 4 IPOs and 4 exits and 1 death. 4 exits of it. Then 2001, Bloomberg Capital raised its first venture capital fund. And since then, we've raised 6 funds, and we have now about 65 companies in the portfolio. Our offices are Miami, New York, San Francisco, and Tel Aviv. We're about 27 people on the team. We have 2 strategies. One is early stage. We focus on pre-seed, seed, and A rounds. We like to lead or co-lead those rounds, usually putting in between $1 and $5 million to start, and then save about 50% for follow-ons and those that merit additional funding. And then we have a growth fund that starts late A, early B, and can write $5 to $15 million checks.
So, I mean, when you started your first fund to now, it's probably more than 20 years. Valuations have changed. Things have changed drastically. An AI company raises a seed round of $100 million.
Mm.
So things have drastically changed. I guess my question to you was, what didn't change in this business?
What did not change?
Yeah.
Oh, I love that question. I've got a great answer. Technology changes, human nature doesn't. So the lesson we learned from that is the context is constantly changing. Valuations are up and down. We know that there are cycles. Nothing lasts forever. The average length of duration on the Fortune 500 list used to be about a century. Now I think it's down to about 15 years. Most of the large companies of today didn't exist 50 years ago. That's very unusual. So the pace of change in that respect is accelerating. Stand still. I heard a famous investor the other day at a conference we were speaking at both in Boca Raton named Leon Cooperman. And he said, every day in Africa, a gazelle wakes up and realizes it has to outrun the lion to survive. And every day in Africa, the lion wakes up and realizes it has to run faster than the slowest gazelle to eat or it'll starve. So the lesson of life is keep running. And the lesson of Silicon Valley is keep up with the change. Human nature is going to stay the same. There are jerks and there are great people. There are incentives that motivate people. There are bureaucratic constraints that slow people down. Let's try and move better and better into the future toward a way that is productivity, enhancing, life affirming, dignity respecting. And my lesson from venture capital is it's about the network. It's about the people. If you treat people right, as you know from the karmic principle, it will generally come around to benefit you. If you screw people up, they're going to remember. If they screw you up, hopefully you will be smarter the next time and not want to work with them again. So I think that the technology changes and you got to keep up with it. But human nature is quite stable. And I'll give you one more lesson. We have been so blessed to work with serial entrepreneurs. We've backed them one time and they were successful, twice and they were another successful. And sometimes we're on our third round with these entrepreneurs.
Who are some of those entrepreneurs that you repeatedly work with?
Sure. One fellow is Oren Netzer. Oren Netzer was the founder of Double Verify. We invested $8 million in the seed A and B rounds. Ultimately, we were able to take out $578 million in profits when the company went public and we distributed to our LPs. He's started a new company called Data Heroes. We've invested in that company. We're friends to this day. He just sent me an offer to go to an event here in Miami that I didn't even know about. Right up my alley. I wanted to attend it. So if he's thinking about me all the time, I'm thinking about him. Another example is a man named Dan Sanker. Dan Sanker has been the CEO of two of our companies, one called Case Stack in the logistics area. It was sold for $255 million. And the acquirer did not want a small skunkworks, which Dan had set up to work on some SaaS model software. And so I said to Dan, let's just take it and build another company. And so we built another company. And 7 years later, we sold that company for another $216 million called Supply Pike. And they're both based in Arkansas. And now Dan is going to do a next company with us. So that'll be the third time. There are more examples, but you get the picture. And I'll give you one more. Benny Nachman, I just was on the phone with him before our interview. Benny Nachman was the founder of a company called Creditrax, Israeli/Maltese merchant acquiring bank. It's probably the most complicated company ever in our portfolio. Works with Visa, with MasterCard. They make sure that the merchant gets paid. So it's a very complicated financial regulatory regime. All the European governments, Asian governments, US, Canada, and the card providers, et cetera. It's complex. And then there's debt and equity and bonds and et cetera. Anyway, he did very well. That company ultimately sold for $1.1 billion to Shift4. And now he started a new company called Jazzby, which we're also invested in. It's doing extremely well. And then now he and I are investing personally in companies together. And so these ties that bind are absolutely wonderful because I know how he thinks. He knows how I think. We trust each other. We've been through hell together and back, and we've seen failures and successes. And that's a wonderful part of life, to have that long-term relationship where you build, you learn, you teach. It's a give and take.
Yeah, I was just talking to another founder friend of mine, and we both write angel checks. And I was telling him that, I trust your judgment. So, if you're writing a check, just let me know. I'll write a check, right? Like if you know a person enough and their judgment and what they value in terms of a deal, especially at an early stage, and if you know that it matches with your own way of thinking, it's easier to make these decisions faster. I get that. So you mentioned pre-seed and growth. In growth, you have a lot of data to look at and make a decision. In pre-seed, there is no data.
Correct.
And it's all qualitative. It's more of an art than science.
Yes.
That's where I feel a lot of experience and your own unique individual ability to distill a good idea versus bad idea, a good technology versus bad, a good entrepreneur versus bad comes into picture. So talk to me a little bit about how your decision making is in terms of pre-seed, where there's no data, all you have, and especially for a new founder and not a repeat founder, because a repeat founder, then again, you have a lot more data about the founder itself, right? And how we execute it.
Yes. So my way of looking at that is that at the pre-seed, the premium is on the team. The team is much more important at that pre-seed because they're going to pivot no matter what they say. Something's going to change. I once spoke to a successful investor years ago. He said, no good company pivots less than twice. I don't know if that's statistically true, but the point is that very few people can really predict the future. It's opaque, it's unknowable, it's probably nonlinear. And so you've got to be able to react quickly and effectively. A great team is more likely to react quickly and more effectively than a not great team. So we look mostly for the teams. I also do look for large market potential, because it's better to hit a big target than try and aim at a small target. We also favor industries where there's not a lot of competition. My friend Peter Thiel talks about this a lot, like in little monopolies. And economically, we don't like monopolies. But when you're running one, of course, It's better to have pricing power. It's better to not have a lot of competition nipping at your heels. So some of the best companies, and I named a couple of them, Double Verify and let's see, Nutanix, another company that was very strong, Indian Nexus. Those companies, when they started, they really didn't have much competition at all. Or what they were doing was very distinct from what their competitors were, how other competitors did it. So we could differentiate and say, they do it this way, we do it differently, here are our advantages. That's helpful. So team first, large market, and minimal competition are, I'd say, three of the key factors for us.
I think I've been doing angel investing since 2017, 2018. I work with a fund here in Seattle called Insights of VC, where we invest in SaaS companies. And my experience has taught me that there are only two criteria, at least I come to think of it now, in pre-seed. One is I want an absolutely insanely talented founder. And my definition of talent is, because I invest in tech companies, he must be writing code, or the team must be writing code way better, way faster than any senior team inside Microsoft or Facebook. So if you're writing above that, that is the definition of my talent. And you can have your own definition. So I basically drill down to, it's similar like you when you said talent, but the talent that I really look for is their ability to show me the product, come up with the product as fast as I can. And they have to write it and they have to iterate it. And one founder might be really good technical founder, the other one might be about thinking and strategy and operation side. But I want that one as my talent. So that's how I sort of narrowed it down to what I look for my founder. Do you have your own definition of what is talent for you?
You remind me of my mother, who used to say, before we had children, I had 3 theories about raising them. Then I had 3 children. I no longer have any theories. So my metaphor there, or analogy, would be that in Nutanix, let's take that. Do you know the company Nutanix?
Of course, I work in storage. So Nutanix is like, I follow it closely. The stock has been outperforming last couple of years, insane growth.
Amazing. So this company, we were the first investor. We made hundreds of millions of dollars on the exit. We were very close to the founders. Now they came to us and they described exactly what you said. Mohit Aron was the most technical of the 3. He was considered one of the 50 best programmers in the world. He came from Google. He, I think, helped develop the Google file system. He left Google. The other 2 fellows were from Oracle. And together they said, we're going to do what Oracle does for storage. Everybody buys these old big systems that are hardware and software. Instead, we're going to emphasize the software and buy commodity hardware. And the cost curve will keep going down, and we'll be able to help people afford more. And because the cost curve of the rise of demand for digital storage is growing exponentially and nobody can spend that much, we've got to find a lower cost curve. That was the thesis of the business. And we have this wonderful CIO council, an innovation council. We took the Nutanix trio to them in New York, and we said, if they build this virtual storage idea, would anybody buy it? Is anybody interested? And 3 hands went up, a big law firm, a big investment bank, and I've forgotten the third. Those became their initial customers. The first customers came from this council. And I remember Nataraj, the CEO, calling me right before the IPO and saying, David, I just want to thank you guys at Bloomberg Capital, you and Bruce and the others, because those first customers, it happened to be Weil Gotshal, big law firm, has gone wall-to-wall Nutanix just before our IPO. And it shows that a world-class multinational firm is willing to take a bet on us as a rising technology provider. So we just want to say thank you. But the funny story about my mother and then the 3 founders of Nutanix is, you're right. They were all really talented. Mohit, probably the most talented in terms of coding ability, but Nataraj was an executive, and what's the other fellow's name? Ajit was the other fellow, Ajit Jain. They were all brilliant. Each of them started unicorn companies. Ajit started ThoughtSpot, Nataraj
Cohesity,
and a new one, and Mohit started cohesivity. So they split up, but they were each successful in their own domain. So I think quality is recognizable. You tend to want it to be coding quality. There are other qualities. I heard somebody recently say that every CEO needs to be the best salesperson for their company. And I think that's true in a sense.
Yeah.
They may not be the best coder. You need a great coder, but often that's the CTO or the co-founder.
Yeah.
Often the lead in the company is going to be the more business-oriented person. Now, I'll go back to my experience with Checkpoint Software, where there were also three founders, Gil, Shved, Marius Nacht, and Shlomo Kramer in Israel. And they were very young. They were in their early 20s. And Gil was presumably the best coder. He was really the technologist lead. He also, though, was the one who maintained the helm as CEO and went forward to run it for 20 plus years. He just retired. Shlomo was polyvalent. He could sort of do anything. He could code. He was an executive. He could do strategy. And he spun off and did many companies. I'm sure you know a number of them that he's invested in. And then Marius was more of the marketing side and also extremely intelligent. He's become a fund manager. So each of them have done their own path in life. And so I'm not going to go along with you and say they have to be the best coder. I think that's one way to success, but luckily success has a few channels.
Yeah. I mean, the reason I picked personally that is every other skill, what I've seen is the founders who are, at least a team that is good at this, they'll acquire the other skills and they're teachable, they're learnable. And if they have resilience, they will get into those skills and learn them as they go along. But this skill is, if that skill is missing and they are still saying that they're doing a tech company, that early 1-2 years is going to be painfully hard. And the chance and likeliness to them getting to Series A, Series B even goes down further. So that's my, thinking about that.
Well, I'm going to push back a little bit. You're talking about a very specific kind of company. You're probably talking about enterprise software and digital storage and so on. So that domain, you may be right. But I've had success with many types of entrepreneurs. I mentioned Dan Sanker. Dan Sanker is a world-class expert. He has hundreds of thousands of followers on LinkedIn in logistics.
Yes.
He knows how to code, but he's not an expert coder. But he understands the domain, and he built a solution that people really want. He's built now 2 or 3, and we're about to do another company with him. Benny Nachman, the one who ran this merchant acquiring bank, the most complex company we ever invested in, sold for $1.1 billion. He's a lawyer by background. He can't really code, but he's a great businessman. He just sees a problem clearly. He's very charming. He can sell. He can listen empathetically to a customer, understand their pain, and say, how about this? And often he gets a yes. So again, I think there are multiple ways to success. That's why the world has 8 billion people in it. And there are hundreds of millions that have become extremely successful. Not all of them were coders.
Yeah. I mean, I agree with you. I always think lawyers actually run the world.
What's that?
Lawyers are the one actually running the world. They're running hedge funds. They're running, all the private equity firms are, headed by, once upon a time a lawyer, right? And they become investors. You take Carlyle or some of these big companies, like usually they're run by ex-lawyers. So
I'll tell you
a great lawyer is actually talented in many things.
Okay, I'll tell you why that's happening. It's not a good sign when lawyers are put in charge of big companies. It's a sign that the compliance regime is the most important thing for that company. That's sad. And that's a problem because government is overreaching. It's too intrusive, often contradictory. Often one agency will say this and another agency will say the opposite. So I look forward to the day, and I hope this new administration will do some of the reform and reduction of bureaucracy and regulation so that we don't have so many lawyers running banks and so on. My dad was a lawyer. I love lawyers, but keep them in their place. Generally, a business leader is not best suited as a lawyer.
Yeah, but what my understanding was, and that's a very interesting point you made, and I never thought about it in that sense. My understanding was always that these guys are so good at doing their thing, and they transition to, doing investing.
There are a few like that. There are a few like that. More often than not, when I see the large public, I'm putting lawyers on, it's because they have so many regulatory constraints. They have lawsuits. They have all kinds of things, and they need that risk prevention. Remember what lawyers do. their main goal, risk prevention. An entrepreneur is not about risk prevention. An entrepreneur is about evaluating risk and seizing an opportunity that's been unfilled. Lawyers are there to keep you out of trouble in the main. So there are some great lawyers who have become CEOs. I grant that. But I'm more in favor of entrepreneur salespeople. I like people who can take a technical problem, have empathy with their customers, and share that vision with the world. Be an evangelist.
Yeah. So you mentioned you did 5 funds. You're now doing a 6th fund. Obviously, you have a great network. But different VC firms have what I would call as superpowers. Like the Sequoia's A16Zs have this huge sort of legacy as a superpower in one sense. You also have that in one sense. You also have the network as one of your superpowers. But you talked about the chief CIO council that you have. I had a different investor who had this product group. They have 10,000 product people in their group, and this fund had outsized returns when you compare to a lot of pre-seed stage funds. And their basically superpower was that they were able to pick companies at a very early stage because their council was using them, and organically they were able to pick those companies.
Yes.
And you sort of mentioned that in your Nutanix example. And talk to me about that council and how is that helping you sort of pick winners and losers?
Great. Our innovation council consists of chief information officers, chief security officers, chief technology officers, and a smattering of others, sometimes chief marketing officers, because they're often specifying a lot of software these days. And we get them together about 4 times a year. They really enjoy conversations among themselves on a topic of mutual interest. For example, an older topic may have been mobile telephony in the workplace. What are the key risks and rewards and best uses we're finding for it? Or AI in production application given privacy constraints. What are the latest advances in cybersecurity for large enterprises and so on? So we'll have them talk about that topic, and then we present a couple of our companies either before we've invested or often just after we've invested, and we get feedback for the entrepreneurs from this council about how well the messaging is coming through. Is it a product market fit? Is the pricing sensible? Is the go-to-market plan logical and likely to be effective? So a lot of feedback. And then often what comes are our design partners. Let's try that in our shop. And it really helps because there's credibility that we've built up over decades of bringing in companies like Nutanix and Double Verify and Braze. And these are all IPOs that we've had. And there are many more. And so when the CIO councils see something from us, they know that we've vetted thousands of companies down to a few that we invest in every year. And we try and bring the best of the best to this council for this feedback. So that's, I think, very, very helpful. One other area that I think is a differentiation for us is that we're investing in the right places in the world. We're investing in the leading democracies that happen to foster innovation. So it's Silicon Valley, it's New York, it's Tel Aviv, it's Miami. There are other places, Silicon Slopes in Utah, parts of Texas. We follow the entrepreneurs and we try and support them wherever they are. We don't have a geographic constraint that says you must come here or settle there, but we do say the largest unified market is US or North America. We can help you get into the Fortune 500 leading companies. Most of our companies are selling B2B software. And so we have a superpower in helping them do that sales process, which becomes repeatable. So one of our investment theses this time, and it's been for a decade or so, is finding companies that are exploiting proprietary data sets with an algorithm, typically machine learning and now generative and other, that can be applied in a vertical domain. And so, for example, we have one company that's pursuing AI applied to mining. That company is called Ver-AI, and they're doing really well finding copper in otherwise difficult terrain. We have another company called Imaging that is finding cancer and able to detect in minutes rather than 3 to 4 weeks for the genetic testing. Another company helping insurance companies write complicated policies in a very, very short period called Joshua. Always take a huge amount of time. Telon, we just invested in San Francisco. They help auditors do automated computer vision inspection of receipts so that one can see 100% of the receipts instead of the typical 3% sampling. So these are many, many ways, and I'm trying to show you in a variety of domains where artificial intelligence or other intelligent algorithms can analyze raw data and provide very valuable, useful information to existing businesses in almost every domain on Earth.
I always like to ask investors, uh, where they're investing their own personal capital. Can you talk a little bit about what's your own strategy? With a fund, you have restrictions, right? With a fund, you've told an LP, you're providing an exposure to a certain asset class. And you also want certain stability for your fund. So that means you'll not go into geographies that you might want to take personally, some risk. So can you talk about your own personal investing strategy?
Sure. Well, first of all, I've been very fortunate to become very wealthy through the venture capital business because we've had a lot of successes. And as you know, the carried interest, the 20% of the profit of the fund, if you make it multiple times, really rebounds to the benefit of the investor founders. So we've done really well, my colleagues and I, and that. Now, once we have all that capital, a lot of it comes in the form of stock in public companies. Those Double Verify, Nutanix, Braze, others. I've often held those stocks. Sometimes I do what are called an exchange fund, where I'll take a chunk of millions of dollars of one concentrated stock, and then it flips into, I trade it over a period of 8 years, tax-free, into the S&P 500. I take my one stock and I diversify it without any transaction costs into a whole portfolio that's quite diversified. I've also personally invested in real estate, and particularly one area that I'm going to mention to you, which is non-obvious, is I really enjoy investing, and I've made a lot of money in oil and gas and fossil fuels. And that's very uncool, but I am what's called an energy humanitarian. And it's fine for wealthy people in the Bay Area and the Upper West Side of New York to feel good about themselves by thinking about all the green energy stuff. But you come from India, so you understand that there are hundreds of millions of people that have zero electricity. There are 700 million people on Earth that have zero electricity today. There are 4 billion people that have less than 4 hours a day access to electricity. So the world needs a lot more power. And from what I read, and I read a lot, the only possible way we can get poorest people on Earth to have enough energy is if we utilize more of the God-given resources of natural gas and coal. I'm all in favor of innovation. If solar power really works in certain areas, great. Same with wind power, and I love nuclear and hydro where it's applicable. But the vast bulk, 80+% of the world's energy, is still coming from fossil fuels. So while everybody's voting against it, I vote for it, and I make lots of money because when people are voting with their emotions instead of the data, they lose and I win.
So is this mostly public stocks or private companies?
I've done public stocks, I've done private investments in funds, and I've done options betting on the price of oil, for example.
Another question I also like to ask investors is, who are the investors they admire the most and like to learn from? And you mentioned Peter Thiel, but who are the names, or like your friends
Peter
or peers?
Peter Thiel is a friend, and I admire him greatly for his intellect, for his ambition, for his initiatives, for his rule-breaking kind of mindset. Joe Lonsdale is in a similar domain, similar vein, and we've invested a lot together. We're the second investor in Atapar after he created that company. And we bought some of his early shares through another fund I helped do in his early shares in Palantir, which is a great company. Also think that Mark Andreessen and Ben Horowitz are amazing, and they've built an incredible franchise relatively quickly. I mean, our firm is older than theirs, and they're like 1,000 times bigger than us. So they've really done remarkably well. There, of course, are the classics. The people at Sequoia, Moritz and Leone and so on are tremendous. I'm old enough to have worked with some of these great guys in the past, the old generation. And I'll just go back to a little bit. Venture capital has changed. You mentioned that. When I was starting out, it was very much a hardware business. It was very centered around semiconductors
And
test
Silicon.
equipment.
That's what we call it, Silicon Valley.
That's right, Silicon Valley. It's not Software Valley. That's a very good point. And so that world was certain type of engineer, different engineer. There were mechanical engineers, there were electrical engineers. Today, obviously, it's coders that are the top of the rank. And then some people are moving more toward a combination investing, both in hardware and software, that's called so-called deep tech, because we believe that space is a very exciting opportunity for new innovation. Obviously, AI has a lot of innings. We're very early in the AI transformation, and I think it's going to be a massive productivity enhancement. If you'll permit me, I love to sort of do it 300 years of economic history in 1 minute. So I'll do it really quick. 17th, 18th century, the world automated agriculture from human and animal to the machine, threshers and plows and tractors. That dramatically improved the productivity of agriculture. And all the people who worked on the farm lost their jobs. What did they do? They moved to factories. By the time of 1776, 95% of Americans worked on the farm. By Civil War, 1860, 40% worked on the farm, 40% in factories, 20% in services. Today, we're, I think, over 85% in services, only 2% on the farms. So first we automated the farm, then we automated the factory manufacturing. Now we're automating the information world, the world of knowledge workers, the world of data. And that's why we at Bloomberg Capital look for data-intensive companies that can sell into generally one vertical or maybe more, using intelligent algorithms to shape, to refine, to distill, and to interpret that data in an intelligent manner. And the world is full of data problems. Every industry on earth can become more productive. My way of describing venture capital is we are the outsourced R&D function for large corporations. And yes, some venture capital startups and companies sell into the SMB world and even into the consumer world. But our world of B2B software, mostly we're selling to the 10,000 largest companies on earth. They're constantly in need of productivity. It's one of the reasons I like where our firm is positioned right now. We're selling in the right democracies. We sell to the right customer set. We have strong balance sheets. They need technology. It's very difficult to invent the technology in a big company. They generally outsource by buying, by distributing, by partnering. And it turns out one more interesting thing. Large companies make most of their profits on their newer products because the older products become commoditized. So the higher margin products need to come from often startups that we sell to them. Make sense?
Yeah. So we're almost at the end of our conversation, but I like to ask, some of the common questions to all our guests. So one of them is, what are you consuming right now? Podcasts, books, that is influencing your thinking?
Okay, this always shocks people. I'm a huge reader of the Bible. I think that the Bible is the greatest guide to human nature, to wisdom, and to what really matters in life. So I'd urge everyone to read. I have a specific version that I like. It's by Dennis Prager. It's called The Rational Bible. It doesn't require suspension of belief. It doesn't require disbelief in science. It's totally copacetic with science, but it teaches you why and should rather than just what and how. Pause there. Now, in the other domains, I love listening to economics podcasts. I love listening to new edgy technology discussions where we're talking about what's going to be in, say, the next 4, 5, or 10 years. So a number of different folks, I can't name all of them, but there are many that I like to listen to. Also on demographics, I think that's very, very important to understand, and regulatory changes that are in the offing. So I'm going to be going to the inauguration in Washington soon. And part of the reason I'm going is to understand what's going to change and how that's going to change the outlook for certain industries. We're starting to do some big deals in defense tech. And so I'm going to be talking with the generals and with the appropriations committees and understanding what the next generation of weapons needs to be, because it turns out when we look back on the Israel war with Gaza, Hezbollah, etc., and then the Iran was behind their enemies, but then the Ukraine-Russia battle, the Western democracies have not armed themselves sufficiently. And we've, I think, taken our foot off the gas. We need to be investing in deterrence, in defense, with a very intelligent new generation that'll be mobile, drones principally, very next generation weapons, guns, pistols, machine guns, etc., and all kinds of new technologies that marshal intelligence data. I think Anduril is a great example of that. So we're looking for those kinds of things. So my consumption is quite broad. I like to read the editorial page of the Wall Street Journal. I think it's very important to understand what's going on in policy and economics and how those interact. To me, a politician who doesn't understand economics is not going to be helpful, and an economist who doesn't understand politics is not going to be successful. So one needs to know both. And a business person needs to understand those domains as well. They need, even though the technology might be stellar, if they don't understand the economic cycles that they're in, they might make mistakes. And if they don't understand the policy risks that they face from regulation, they can also be blindsided. So holistic learning is the thing. And I would say the most important thing is continuous learning. I'm told that an engineer today is outdated in 7 years after they graduate from college, because things are changing so fast. So nobody's a genius constantly. You need to continue learning and learning from other people. The best point about learning from other people is they can help you with a heuristic. They can help you cut through the chaff and get right to the point, because they've looked at a lot of stuff and they can tell you, hey, look right over here and you'll find just what you're looking for. And I must say, I love using, say, ChatGPT and some of those new tools. They're so helpful and they're not perfect, but they're getting better and better. And we're using it a lot at Bloomberg Capital to find entrepreneurs, to go out and organize ourselves and be proactive. So the world is bright. Go out there, start looking around the internet, finding tools, finding podcasts that teach you about the future, but have a base of history.
Who are your mentors who helped you in your career?
Mentors. Again, Fred Adler was one of my great mentors. Another lady named Abby Joseph Cohen hired me at Rowe Price. She went on to become the queen of Wall Street at Goldman Sachs for many years as a market strategist. She was always giving me good advice. Sometimes a kick in the pants when I wasn't performing as well as I should. Alan Patrikoff has always been a gentleman, very helpful. Charles Bronfman is a charming person, a prince of a human being, a great philanthropist, which is now something that I'm engaged in. So I learned a lot from him in that regard. And then I think the people that I learned most from are our entrepreneurs that we've worked with, because they're always confronting really difficult challenges. And I love watching the way their minds think about how to overcome a challenge. And we like to think that we help them in that regard. But I'm in awe of these folks. They find a solution where nobody could see it before. And that's the beauty of being an entrepreneur, and that's the privilege of being a venture capitalist, is working with so many entrepreneurs over the decades and just feeling this productivity surge that moves forward into the economy with new products, new wealth, new successful companies, and new fulfilled employees.
One last question. What do you know about investing that you wish you knew was starting your first fund?
This is very easy. The most important thing for young people is always get your contracts, your employment pinned down. Make sure you have a contract and it's clear, especially if you're doing consulting. Make sure that everything is written down and bound into a contract. Because after one starts going into this project, people's memories change, the incentives start to diverge, and you can get into a big fight. So I think the most important thing is to get everything squared away. My dad was a lawyer, said, David, get everything signed up front. That will help. You can always adjust it later. If you don't get it signed, you're at grave risk of losing what you worked so hard for.
I think that's a good note to end the conversation with. Thanks, David. Thanks for coming on the show and sharing your amazing experience.
This was a pleasure, Nataraj. Let's do it again. Thank you.